In this video, we are just going to talk about 5 instances where I personally avoid trading and when I also believe that every trader should avoid trading for as much as possible. By the way, guys, if you are new on this channel, please consider subscribing so that you don't miss future videos. Quite an active video. I guarantee you learn one or two things in this video. If I don't teach you one or two things, then maybe I've entertained you for a few minutes. So the least that you can do for me is to just like this video. If you are also looking to download stuff, forex robots, indicators, books, and stuff like that, there are links in the description box below. Visit those links and see if you cannot find what you are looking for. Many people also ask me about the broker that I use. See the link in the description box below. So let's get back to our 5 instances where I avoid trading and where I believe you should also just keep out of the market if you can help it or if you should. Because, well, let's face it, your money and people are bound to do whatever they want to do with their money. So, the first instance, what you want to do is number one, don't place trade right before a major news announcement. Many people do that. When you wake up, what you want to do is have an idea. Even if you don't trade fundamentals, even if you are a big technical trader, but have an idea of major news that might be coming for that day, especially if you're going to be trading lower time frames below the 1 hour chart. You need to be aware of any major news announcements that might be coming that day because you might have perfect technical position or a technical trade, but then the fundamentals come in and you are taken out your stop loss, or you lose your account if you don't have a stop loss, and you wonder why. So avoid as much as possible to place any trade just before major news announcement. Whether you are aware of the news announcements or whether you are not even aware of the major news announcements that are coming. If you trade with trader funding programs like FTMO and the sort, they actually will cancel the account if you are caught trading in major news. So if the big guys know to avoid major news, how about you with your small $100 account? Number two, don't trade the market immediately when a new session opens or when the market opens on Monday. Immediately when the market opens on Monday or on Sunday, later on Sunday, usually there's going to be some volatility as the market tries to find direction. You are not going to find any direction when the market opens for the trading week, and sometimes for the trading day, sometimes for the session. You might not find clear direction there. So, depending on the amount in your account or the amount that you are willing to risk, it's a headache because sometimes you can easily get taken out when you thought the market was going this way, but then the market goes the other way. It usually happens usually when the market opens for the week, for the day, even for a session sometimes. So if you're not sure, if you don't have a strategy to deal with that, rather stay away from trading directly at market open. Number three, you want to avoid trading during the market off hours. I mean, like at close of New York session, usually. I don't know where you are on the globe, but usually between the close of the New York session and the beginning of the Asian session, that's usually a time to avoid trade. Usually, If you go with many brokers, the the spread, it just widens so much because the New York traders have gone home, so there is no volume in the market, and usually the Asian traders are still yet to come to their trading desks. So there is basically nothing going on in the market. So if you are going to be trading during off market hours, trust me, you are just going to be taken out by spread, and you are just going to be giving your money to the brokers. So you want to avoid trading during the off hours. Trade when the traders are also trading. The traders at the big banks, institutions are also trading. So during the London session, New York session, Asian session, when you are certain that people are actually trading. Number 4, don't trade randomly. People have a tendency of just want to jump into a trade. Probably they just go onto their Instagram or their Twitter, or they just notice somebody whom they follow or somebody whom they think they are respect for. They just entered a trade and they posted it on their Instagram and they posted it on Twitter. Then they also rush to their charts and are tempted to just place a trade. Or maybe you are just sitting down, you are doing something else, and then you just spot maybe a huge candle form on your chart, and you are tempted to also want to jump in. You are trading off your plan. You are not even using your trading strategy. You are trading randomly. Big recipe for disaster. Don't take a random trade. Every trade, you should have a plan for it. Why are you entering that trade? You need to answer at least 3 questions. Why are you entering that trade? And you need to know your entry. You need to know how much you are risking. You need to know when to get out when things go your way. You need to know when to get out if things don't go your way, also known as a stop loss. So don't take random trades. Huge recipe for disaster. Number 5, you want to avoid trading the last few hours on Friday, because if you are trading forex, many people are now going home. They are calling it a week. In fact, you find many traders, they recommend that you don't trade on Fridays as well altogether. But well, it depends on your strategy. And also, if you love to trade NFP and major news, of course, in our first point, we say try and much to avoid those news. But if you love to trade those news, we all know that NFP comes out on Fridays. But the last few hours, when the market is still open on a Friday, going into the weekend, avoid placing any trades, because the market is winding down. Everybody is winding down. Everybody is planning about their weekend. They are going home. Why are you going to be placing trades there? You are just going to end up giving money to your broker. Sometimes you place your trade on a Friday. It looks like a good idea. It looks like a perfect trade. But come Monday, something major has happened during the weekend, and you are taken out on Monday. Monday market open, you are taken out because you are placing Friday on Friday. You don't even know which direction the market is going to take on the Monday. Avoid placing trades on Fridays. The last few hours of Friday, stay away from the market. You should be winding down and thinking about your weekend. Okay, so I hope you have taken or learned one or two things in this video. Go ahead and like the video, subscribe if you are not yet subscribed. I will see you in the next